and welcome to Business Line. The World Bank has slashed its forecast for oil prices, saying the cost of a barrel of crude will stay near the current lows for the rest of 2016. The World Bank is not alone saying that. Many organizations have already revised down their forecasts. With oil and other commodity prices remaining at low levels for a considerable period of time, countries that are dependent on those are having to revise their economic growth targets, unable to afford to live on the massively reduced oil revenues. Russia is one of those countries. Its economic prosperity is heavily dependent on the price of oil. Previously, we have discussed Moscow's challenges in balancing its budget. Today, we focus on how its citizens are coping. Let's first look at what's happened to oil prices and Russia's economy over the last 15 years. When Vladimir Putin first became president back in March 2000, oil traded at around $28 a barrel. That was the average price for the whole year when the country's GDP grew by 10%, having rebounded after the crisis of the late 90s. In 2004, a barrel of Brent crude rose by $10. Russia's economy finished this year with over 7% growth. After the 2008 crisis, oil prices slumped by around a third in 2009. That's when Russia's economy contracted by over 7.5%, but returned to growth a year later, as did crude prices. When oil really plummeted in 2014, growth continued. But by the end of 2015, when oil prices had come nearly a full circle from 2000, Russia's economy could not hold up under the strain. An additional factor was the sanctions imposed by the West after Russia annexed Crimea from Ukraine in 2014. This is the result.
Collapsing oil prices continue to hammer the value of the Russian currency, the ruble, as inflation there pushes upwards and people cut back on purchases. The numbers are stark. Last year, Russia's economy contracted by 3.7%, according to the government statistics service in Moscow, as retail sales fell by 10% and capital investment by almost 8.5%. This expert from the National Agency for Financial Studies says consumer habits and demand are changing. In general, of course, the consumer market is shrinking because purchasing power is getting weaker and incomes decreasing. With inflation running at almost 13% for last year, surveys show nearly three-quarters of people saying they're cutting back. I have to save money, not make expensive purchases, this man says, to buy cheaper goods, less food, etc. Nearly 40% of Russians surveyed say they now only earn enough for food, making that the priority, not fancy gadgets, as this seller of mobile phones explained. People are trying to save money, not knowing what to expect in the future. So there are fewer customers. They buy less. They're saving money. Even as ordinary Russians' quality of life falls, President Putin's popularity remains high, according to opinion polls, up to 89% of people approving of his activity as president.
Cheaper oil hits Russia's national currency, which has already been weakened by geopolitical tensions. The ruble started falling after Moscow's annexation of Crimea, but it really went into free fall, reaching record lows against the US dollar recently. As a consequence, Russian consumers have had to find ways to maintain their lifestyles, even as their real wages reduced by 9.5% in 2015. Retail sales for this period plunged by 10%, while inflation accelerated to just under 13%. And there are no signs things are going to get better anytime soon. With Moscow trying to adjust to this new reality, could it consider changing its oil strategy?
Oil prices continue to get a bit of a boost from the idea that major producers, particularly Russia, may cooperate to cut production. Russia's Energy Minister Alexander Novak has confirmed that they would take part in a meeting sometime next month between OPEC member states and other oil producers. But analysts say that Russia is actually likely to increase production this year, and key is US shale oil, which is expensive to drill.
The most important trigger for this year is a possible drop in non-OPEC production. Such producers has very high costs, and current levels are too low for maintaining the current level of production.
OPEC's most powerful member, Saudi Arabia, has been trying to make it uneconomic for the shale producers, resulting in the glut and massive price slump. But now no one can afford to pump less, knowing others would step in to fill the gap. That applies particularly to Russia, very dependent on oil revenues, and also facing technical difficulties in reducing production in winter.
Big news from Twitter this week. There is a major management shake-up at the online social networking service, with top executives leaving the company. First, we'll look at who's gone, and then why did it happen this way and what's going on at Twitter.
4 of Twitter's top executives are leaving. Jack Dorsey, who recently returned as chief executive of the struggling media company, said he was sad to announce the departure of the heads of its media, product, engineering and human resources departments. Twitter's share price has fallen nearly 50% since Dorsey's return last year. Amid concerns, it's failed to significantly boost its user base of just over 300 million and was surpassed by photo-sharing app Instagram last year. Reportedly, Twitter is to name 2 new board members soon, along with other management changes.
After the latest round of departures, there is but one question hovering over Twitter. Where's the company going? The stock trades well below its IPO price of $26, and investors are waiting for the next earnings call to know how bad the situation is. Now, we might get a better idea of Jack Dorsey's plans after the leadership team retreat scheduled for this week. All 4 executives who left were hired by former CEO Dick Costolo, so for the co-founder, this could be a chance to build his own team. Attracting talents won't be easy, though, given the revolving doors on the top floor. Just look at this pic tweeted by BTIG analyst Rich Greenfield. In little over a year, rather a lot of managers have left the company. But Twitter's big issue remains the slowing growth of its user base. Moments, one of the last features to be rolled out last year, was meant to attract new tweeters. It might not be enough, as Dorsey called for a bold rethinking of the platform. Could it be the rumored decision to exceed the current 140-character limit? The company is also trying to please existing users, at least some of them anyway. As reported by Recode, it turns out that Twitter isn't showing ads to VIPs anymore. Sources say the company selects these lucky individuals by a variety of criteria, including the volume and reach of the tweets they generate. That was it. That was IT.
That was it for now. Thank you for watching, and we'll see you next week.